More than 2 years after the board proposed demerging Vedanta, company has now finally received NCLT approval for this after facing several legal challenges. To understand what this demerger means for Vedanta as shareholder, we now have Mr. Anil Agarwal, chairperson at Vedanta Limited, now joining us. Mr. Agarwal, thank you so much for taking your time out and joining us here on ET Now. We will talk about the demerger in just a bit, and first of all, congratulations on that. But before that, let's also discuss the macro setup. You've always been very bullish on India's metal and mining sector. But given the state we are in right now, China economy continues to remain a problem. Where do you see India's macro setup headed, and what does it mean for India's metal and mining sector then?
We have not comparing with China. No, we have 1.4 billion people. We need to cater our own demand. Anything, there's two demands. One is above the ground and one is below the ground. So above the ground, we are self-sufficient. Below the ground, we all are working to make sure we don't dependent on outside, whether it's the oil and gas, whether it's the aluminum, copper, zinc, iron ore, anything you talk about, I'm in that business. And I believe the India geology is very good and it's required a lot of hard work. And we have been very successful exploring this, producing this of world-class resources in India.
Clearly, so India is looking to become Atmanirbhar in terms of everything, and it could also be metals and mining. But Mr. Agarwal, let's now talk about the demerger. What does this mean for minority shareholders? So for instance, if I am a shareholder, what does it really mean for me?
Beautiful. If you are holding one share of Vedanta, it will convert into the 5 share of the 5 demerged company. So why the demerged, we believe that these all 5 entities has so much of a potential. It make them demerged. They can be, each company can be like a Vedanta. And that was the potential, that was the purpose. That's how we have did it. And we will always have a positive dividend policy because it's a fundamental policy of our Vedanta to continue dividend paying company.
Talk about this dividend angle in just a bit, but before that, if you can take us through what led to this delay. It was approved in, or rather the board had proposed it in September 2023. NCLT approval has been pending for long, but now that the approval has been received, how much time will the final demerger take place?
I don't think NCLT normally takes this much of time. If any demerger you take, this takes so much of a time. We had processing delay, banker has to, it's the largest merger ever happened. So that was a very normal and everybody has to go through that process. Going forward, by March, we will be able to complete our demerger. In April, they will have all 5 share of the company, all our minority or every shareholder will have their share in their hand.
Saying that the demerger is likely to be completed by March 2026. But is the NCLT approval been received without any kind of conditions?
It is a normal approval. I'm not a lawyer, but it's a complete clean approval to go ahead.
Will the demerger help the company in deleveraging? I understand Vedanta Limited and the parent company Vedanta Resources has reduced their debt substantially over the last 3 to 4 odd years. But what will the roadmap be now? By when will Vedanta become a completely debt-free company?
I don't want my company to be debt-free. Why should I be? Because we need working capital. But the normal norms is 1:2. And we will have less than that. Even because we are progressive company, we would like to keep within the norms. If you do a debt-free company, that means I'm not growing. So we will keep within the norms, much lower than the norms, than where we are today. We have 48,000 crore debt in entire demerged entity. And looking at the balance sheet and the cash flow, we will allocate the debt to each company.
Okay, that was exactly my next question. Analysts are asking this question: how will the debt be apportioned between the 5 companies that will come into existence in April next year?
The 48,000 crore is the debt. According to balance sheet and the cash flow, we'll allocate the debt to each of the company.
These companies will have independent board, right?
Each company will have an independent board, independent management, and it will grow because it will be a when you have a multi-product company, diversified company, the multiples are low. But if you have a single product company, multiples are at least 30-40% higher. So that advantage each company will get.
Okay, and which of these businesses will you be most bullish on? Will it be the aluminium business?
No, every business, oil and gas, going to be the killing because oil and gas is the lowest cost of producer. Government policy has been announced. We are the only player which has the offshore, onshore. We are ready to invest $4-5 billion to produce up to 1 million barrel offshore, onshore in this oil and gas and lowest cost of producer home market as a long short oil and gas. Each business is where do I put in my hand? Each business has a huge potential. Hindustan Zinc will be producing 3 million ton of, and Vedanta will be producing 3 million ton of zinc. It will be producing, we never produce silver in this country because of our tremendous effort where everybody says no. We are today producing almost 25% requirement of silver, 700 to 800 ton every year. We are going to take it to 2,500 to 3,000 ton level to cater the entire demand. And iron, steel, we are always bullish on iron ore. Very, very promising. We have a large block of iron ore and we have one of the very good plant. We are going to produce special steel, green steel because we have access to the gas. So, and the power is my darling because we are going to have 20,000 megawatt power, all thermal, all pit head plant, and it is all brownfield. So our cost will be about 40% lower than the greenfield. So all business will be very exciting and there is no, it is all there. We have to take it forward to a different level.
I'm sure, Mr. Agarwal, all your shareholders will be very happy to know that you are bullish on all of the businesses and all of the demerged entities. And let's also talk about your CapEx plans then. About $1.5 to $1.7 billion of CapEx is what you had lined up for FY26. What will be the roadmap from here on, especially once the companies are demerged?
We will work out like with total Vedanta as a holding, we were looking to invest $20 billion in 4 to 5 years' time, which was about $4 billion into the aluminum, about $3 billion into the zinc and silver, oil and gas, $4 billion, iron and steel also require about $3 billion to make that capacity. Power will require about $2 billion. So these are rough idea. Very excited. It is all payback, is very short payback, and it's all in the demand, and we'll have a great future.
All right, clearly Vedanta Limited has a great future. But since we are talking about CapEx, on one side, companies looking to deleverage, whether it is the Indian business entity or Vedanta Resources. And on the other side, we are also talking about CapEx plans that the company has. How will the company balance the both?
See, we have like this year, we are looking $7 billion profit. We have to deploy our profit. Leverage is a part of business. It has to be within. If you don't have a leverage, people don't like it. How company will run? So we need to have 1:2. We are probably in the world, in mining and metal sector, the lowest debt. So we have a full plan. 48,000 will be diverted. They will make their own plan to expand the capacity with their internal approval. If some debt is required, they will go for it. They may go for it. Equity is a very interesting thing. They can get something from the equity debt. So they will plan on it. But to make it a world class and in the area where we understand and the demand is tremendous. And these sectors are difficult to come in. So this will come to. We are paying 50,000 crore tax every year. We have massive tax, government get tax. Employment will generate the largest employment in India because this metal industry require downstream. Shareholder will get dividend, and once the multiple increase and the capacity increase, I believe each company will have a share value, same value as Vedanta has today. So it's a win-win for everybody.
Clearly, win-win for everybody. But Mr. Agarwal, let's also talk about your steel business, which you were looking to sell out, although you had earlier stated that you were looking for the right valuation for your steel business, if at all you want to exit out of that. Your stance on this business, are you still looking for a buyer?
Because we are the largest iron ore producer, and we have a gas available, and the demand is growing. India needs 300 million ton of steel. So we will not leaving this opportunity to go for 10 million ton special steel business. But as is demerged, the share of the board, the shareholder will decide. And whatever will decide, we will go with that.
Okay, so that's your stance when it comes to your steel business. But Mr. Agarwal, Vedanta has always been considered as a dividend pay by shareholders. Do you think dividend policy will stay as is even after the demerger, especially because Vedanta has been paying a lot of dividend over the last 4 to 5 years? Will the stance change then?
Not at all. I don't want any of our companies a policy. It's my personal initiative that we should always remain as a dividend-paying company.
Okay, so you always aim to be a dividend-paying company. CapEx plans are intact. Mr. Agarwal, thank you so much for taking your time out and joining us here on ET Now.
Thank you very much.
So much.
Very nice. All the best.
Thank you so much.
In association with an investor education and awareness initiative of UTM